Hey guys, this is Julie. Good morning. It is Sunday, March 5th, and I feel like Scarlett Johansson in the movie Lucy, eating all the blue pills and getting so smart. It's like I can't take enough of this stuff in, and I'm figuring out how to put my trading strategies together and make money. So let's see what the opportunities are coming up. First, I do like looking at the bond market for several reasons. Number one, it pays the best and it offers a lot of volume and volatility to make money. So if you can get the direction right, meaning you have two opportunities with the bond market, the yield is directly uh, correlated with the price. Um, so that's a given, and that's how people usually trade the bond markets. If the yield is going up, then the price is going down, and if the yield is going down, then the price is going up. So it's pretty easy to trade. Another thing I like is there's a lot of numbers that come out on the economic calendar that give you an opportunity to make money because the market's going to be reacting to these changes in the economic indicators, sending the market into a lot more expanding ranges and directional moves. Directional moves is what I'm looking for. And I've got a system now in place with my algo to try to get a certain number of ticks and then let a runner go. So I like the bonds for that too. I also, here's my tick calendar, my tick table, showing you that you can trade smaller denominated futures markets like $5 for the NASDAQ and the YM, $6.25 for the euro, British pound, $10, the normal crude, gold, nat gas, some of the other $12.50 for the E-mini, beans, yen, wheat, corn. Then you start getting into some good price action as far as dollar value, 15,625 for the 10-year note, and then the bonds, $31.25 per tick. And so you can trade the 30-year or the ultra bond, and I like the ultra bond. I'm starting to like it even more. And here's my sweet spot. Here's the lady in the red dress. 4 ticks, $500 per trade. And so that's what you risk, and that's what you would get. If you put 4 contracts on that 4 ticks, you get $500. So if you are able to get 2 of those trades a day, 3 of those trades a day, 4 of those trades a day, or 5 trades a day, plus I'm leaving a runner too. So I actually have an opportunity to make a lot more than this on runners. So I would have 4 on and then maybe have a 5th one, actually use a contract size of 5 and leave a runner. So, or just take 3 off and leave a runner, which exposes you to not quite capturing the full value of that contract. You might lose that last one, but you would have 3 in the bank. So there are different ways to use your strategy. I like using a runner because that gives me overages or extras, crumbs as I call them, to make up for future misses. So I have something in the bank always growing. So trade the bonds. We know what's coming up on the calendar. We've got non-farm payrolls next week, which will greatly change that interest rate outlook. And then the following week, we've got our Fed announcement on the interest rate decision. And that price is baked in. If they don't move March, I mean, in May, they're certainly going to move. Or April even. I mean, every meeting is supposed to be a live meeting. But so we have a lot of reason to be looking at the bonds. And, if we get that direction right, we can make a lot of money. Here was Friday's trades in the afternoon. just to show you how this market will move. So each one of these was a winner, but in the morning, it was a different story. They were trading down, and so all you do is you flip it, and most of these were winners too. So if you starting to pick up your ears and see the opportunity that I'm looking at, timing your trade to get in the direction that price is moving, but do try to trade with an overall theme, and not just trade them long and short like that, even though Friday was a up and down day, so that turned out to be a good strategy. But overall, if you can pick a direction and based on that yield, you are ahead of the game. And then if you can match that with market, higher time frame market price action, you know, what is that weekly, daily, 60, 15 higher time frame doing? And that gives you a huge clue on the way that the rates are moving. That gives you another impediment to trade it. So be expecting bonds to go lower at some point in the future, whether it is on next week's non-farm payrolls, or on the FOMC interest rate decision the following week. So lots to trade in the bonds. Set your software up to make these trades automatic, getting you in and out on a consistent basis. The key with trading is the markets must be moving. If they're going sideways flat, you just get chopped up, so you have to just not turn the algo on at that time. And it's very easy to see a market that's going flat sideways and stay out of it and don't trade it. Let me give you an example real quick of what that looks like. I'm sure you'll all get the example. That would be crude. Let me just show you a chart of the crude daily. Take me 1 second to pull this up. And you're going to say, oh my gosh, I know how to stay out of a market that is moving sideways. And give me 1 second, here it comes. Okay, here we go. Sideways, flat, sticks, wicks, stay out of that. You just get chopped up. You see how flat that moving average is and how the prices are just sitting there? You want price to break out of an area like that and then go in the direction of that breakout. Just stay out of this middle stuff. So when the market is behaving like this, do not trade it. You've got to have a market that's moving. So if you look at your Ultra Bond, you see how that was moving directionally. We're getting a jump on that interest rate change. So I would expect before that FOMC change, either we might break out, but I bet they come back up for that stop sweep before they go down. But wait for a move like that. If you can catch it on an upside reversal, even better on the daily. But we know the overall direction it's going to be going. We just have to be able to time our entries. So trading the smaller time frame is an excellent way to do it. Again, taking trades with trend or just directionally. And that's it, using your risk management and timing your trades to capitalize on whatever your daily, weekly goals are for the number of trades. So you could say, I want 5 trades a week at 4 ticks each, and that's all you would have to get your weekly goal. Or that could be a day. Or you can kick up your contract size. Don't change your underlying position size. Still get your same 4 ticks, but just kick up your position size and then multiply that by 5. And that's how you start making some serious money trading. So this is Julie, J Auto Trading Strategies. Hope you have a winning weekend and look forward to some great opportunities next week. As always, look at the disclosures for futures trading because there's no faster way to lose your money than trading. Just ask all the hedge funds that have gone out of business. All right. Thank you so much. I'll have a good one.